Understanding broken period interest, a key concept for loans. What is broken period interest? Definition. Broken period interest refers to the interest that is charged on a loan during the gap between the time the loan is disbursed and when your first official payment EMI is due. If there's a delay between the loan disbursement and the first repayment, the interest starts accumulating from the moment the loan is credited to your account, even if you haven't made any payments yet. This period, where the interest is charged but no regular payments are made, is called a broken period. Lenders calculate this interest based on the total loan tenure and the gap between disbursement and the first EMI. The reason this interest applies is due to the non standard installment structure caused by the gap. Why it happens? Interest starts accruing from the moment the loan is credited to your account, but your first EMI is due later, creating a broken period that doesn't follow the regular installment schedule. Example of broken period interest. Let's break it down with an example. 1. Loan details. Loan amount 1 lakh rupees or disbursal date. First, EMI due. May annual percentage rate. APR 10%. 2. Interest. Calculation. A monthly interest rate equals 10% divided by 365 days times 30 days equals 0.82% interest for the broken period. 1 lakh rupees times 0.82% equals 820 rupees. You will owe 820 rupees as broken period interest, which will be added to your first regular EMI payment on May 1st. How lenders collect broken period interest. Here are the different ways broken period interest can be collected. 1. Upfront deduction. The lender may subtract the interest from the disbursed loan amount. You receive 99,180 rupees instead of 1 lakh rupees after the interest is deducted. 2. Added to the first payment. Broken period interest is added to the first regular EMI. Your first EMI due on May 1st includes both the broken period interest plus your regular EMI amount. 3. Separate installment. Lender charges a separate installment for the broken period interest before your first EMI. 4. Adjusted with the first EMI. The lender adjusts the broken period interest into the first EMI. You receive the full 1 lakh rupee loan amount, but your first EMI is adjusted to include the interest. Why broken period interest matters. Financial planning helps you plan for extra costs in your first payment. Transparency. Confirm with your lender whether broken period interest applies to your loan. FAQs about broken period interest, an extra interest rate. It's not a new interest rate, but the interest for the period before your regular payments start. 2. How do you calculate it? Or formula. Periodic interest rate times loan amount times number of days between disbursement and first payment. 3. Does it apply to all loans? Yes. It can apply to all types of loans with a gap between disbursement and the first payment due. 4. Is it the same as gap interest? Yes, both terms refer to the same interest charged during the gap